Hi, this is Victoria Casey. I'm with Creekview Realty. I'm a writer. And today I'm here with another mortgage lender from NOLA, which is one of our favorite lenders. And this is Mr. DeCoven Wesley. And I'm going to ask him some questions about the differences between FHA, VA, and conventional loans. So, DeCoven, good morning.
Good morning.
And so tell me, first, what's the difference? I mean, what is an FHA loan? And what are the kind of the three major categories? So first, what is an FHA loan?
Well, to answer the question that you just asked, the three major categories are going to be conventional, FHA, and VA. Okay. And FHA is a loan that is insured by the Federal Housing Administration. And the good things about FHA is that you're able to get finance for up to 96.5% of the actual purchase price. So what that means is that your down payment is going to be 3.5%. So that really helps out when you're comparing that to a conventional loan, which is going to require a 5% down payment. So it allows you to put a little bit less down. The guidelines and requirements on FHA are a little bit less strict. You can also have a higher amount of debt when you go FHA. So it allows a person that may not have as much money to put down to be able to still get into the house that they're looking for.
And you pointed out that FHA is actually backed. It's basically insured by the Federal Housing Administration, but that's not the lender. You would be the lender.
Right.
Now, the other question I have about that is if I am getting an FHA loan and I have a family member that wants to pay towards that loan, towards the down payment, can I do that? Are gifts accepted with FHA loan? Sorry.
Yes, that's another thing that is important to bring up. Yes, it is possible to have a family member to give a gift. Another thing that's good with FHA is that you can also have a higher debt-to-income ratio. So on most loans, the maximum amount of debt that you can have is 45% of your monthly income. On FHA, you can exceed that and get a little bit higher. In some cases, you can get into the 55% range, sometimes a little bit higher than that slightly, but that's a lot higher than what's allowed on conventional loans. So that also helps to be able to get a gift from a family member and to have the higher debt-to-income ratio is a big help.
Now, is there a drawback with having an FHA as far as do I have to have insurance on it, or is there something other requirement that I need to think about when I'm doing this? Because it sounds great. It sounds like if my credit's not the greatest in the world, and I've got a grandmother who can give me some money to put down towards that bill payment, don't have to come up with as much, and I don't have to have as much money on I can owe more money in this situation, debt to loan ratio. But what are some cons?
Yeah, I think I understand what you're saying there. There is a mortgage insurance premium. There's an upfront premium that is going to be included in the loan. That's 1.75% of the actual loan amount, and then there's a monthly mortgage insurance payment that's going to be included there, and that's 1.30 of the loan amount. So there is a monthly mortgage insurance. It is something that does stay on the loan for the entire term. So that's something to be considered. However, when you're thinking about FHA, a lot of times the interest rates are lower than conventional loans, so that helps to offset the mortgage insurance that you will have to pay.
Okay, so let's go on to VA loans. Obviously, with the VA loan, you have to have been active military. The administers those loans and backs them. Actually, one of the bigger places, backed loans in the world. And there's certain terms about active duty, if you had to be this, or if you're a surviving spouse. But what are some of the pros and cons of getting a VA loan? If I'm a veteran and I'm looking at doing that, what do I need to think about?
Well, the great thing about a VA loan is that it does allow for 100% financing. So you don't have to put a down payment. That's a great thing there. You still have your costs that are going to be involved to purchase the home, whatever lender fees that are going to be involved, as well as title fees to get it done. However, the guidelines when it comes to qualifying are a little bit less strict on those. Like I said before, it is 100% financing. The drawback, though, is that you have to be eligible for that loan. So not everyone can do it. You do have to be a veteran in order to be able to qualify for that type of financing.
Right, either a veteran or the surviving spouse of a veteran. And I know that sometimes in the past, especially the VA and FHA loans had more stringent requirements as far as lender required repairs and things like that. They still have some considerations about that. And it's my understanding that the inspector, the person who's going to do the person who does the inspection and the appraisal has to be certified by either FHA or VA. In other words, they have some of their own professionals they want to look at things. Is that correct?
That is true, but that's not something that as a consumer or customer that they would have to worry about. The lender would actually, be involved in, be involved with selecting the appraiser that goes out and ensuring that they are a person that's qualified to be able to do that type of appraisal and inspect the home. A couple of things to be aware of whenever you're choosing your home that you're wanting to purchase is that it does need to be in sound and livable condition. So the things that FHA and VA are going to be looking at and concerned about are going to be the roof and the foundation, because those things are really important when you're selecting a home.
Okay. Well, tell me, kind of just summing it up and bringing it all together. If you just a kind of a really concise, you've already touched on FHA loans and VA loans. What makes a conventional loan more attractive? If I'm basically a higher credit score and more money down, can that save me some money in the long run because I'm, a better qualified loan?
Well, if you're a good fit for conventional, it can save you some money in the long run because you won't have to worry about the mortgage insurance if you're putting 20% down. So if you're in a position to move forward with that type of loan, conventional versus FHA, then you can avoid having to pay the additional mortgage insurance and save some money in the long run that way.
Okay. Well, and thank you, Mr. Wesley, for being with us today. Again, you're from NOLA Lending, and can you tell me how I can reach you if I want to get a loan through you?
Oh, yes, definitely. My phone number is 469-939-0594, and thanks for having me.
Oh, thank you for coming on the show. And again, this is Victoria Casey with Creekview Realty, and you can reach us at 1-800-219-9444, or you can just go to creekviewrealty.com and read up on our articles or contact us through there. Thank you again, and have a great day, and we'll talk later.
All right, you too. Thanks.
Bye.